Hey everyone, welcome back. Today we're tackling the question everybody's been asking. Gold is dropping. So what now? Do you jump in and buy the dip? Do you dump what you're holding and run? Or do you just sit there and panic, scroll your trading app? And here's the bigger twist. Why is someone like Elon Musk, a guy building rockets, brain chips, and EVs, suddenly warning the public about three major events that are about to shake the world? What does that have to do with your wallet and your gold holdings? That's what we're breaking down today. Not the surface, level price swing, not the television economist talking points. We're going into the tectonic forces underneath global finance, because every trading decision you make is tied to something way bigger. Great power politics, central bank secrets, and a technology revolution. Ready? Let's go. Why is gold actually falling? Most analysts give you the same laundry list. Strong dollar Fed will keep rates high. Treasury yields are rising. Sure, that's true. But let's be honest. That's just correct nonsense. It's like saying someone got sick because of a virus. Okay, but why now? Why this moment? What changed in their immune system? So let's dig into the real. Why? Gold has never been just a commodity. It's a measure of money, a stabilizer of trust, a psychological anchor. Gold is falling because global capital is experiencing a tiny, fragile return of confidence in the old economic order. And that wording matters. A return, and a fragile one. Think about the last 2 years. Global supply chains shattered after COVID. Russia-Ukraine war, energy and food crises. Inflation like a runaway bull. Everyone was terrified. The world looked unstable. So money rushed into gold, the oldest safe harbor on earth. But now, something subtle is changing. The war is stuck in a predictable stalemate. Inflation is still high, but central banks squeezed it with brutal rate hikes. And markets are slowly adapting to chaos, like learning to walk on a rocking ship. When the worst case scenario doesn't arrive, when panic cools down, that extreme fear premium in gold begins to unwind. This downturn is the emotional tide going out. But that's not the whole story. If this were just an emotional reset, it would be a healthy pullback. The danger is when the tide goes out, you see the rocks. Those rocks are central banks, especially the Federal Reserve, playing a double game. Publicly, they say we must kill inflation. We're committed to 2%. Privately, their balance sheets say something else. With government debt this massive in the US, Japan, Europe, just servicing the interest becomes a fiscal nightmare if rates stay high. So what's the unspoken desire? Let inflation quietly run higher than interest rates and let debt shrink in real terms. It's stealth devaluation, a slow motion debt eraser. That setup should be bullish for gold. But in the short term, markets are hypnotized by the Fed's tough talk rate spike. Gold gets suppressed. That gap between the official narrative and the eventual reality is the setup. One day, markets will wake up. Wait, you can't get inflation back to 2%. You'll eventually pivot back to printing. When that realization hits, the revenge rally in gold could be violent. So no, this downturn is not disaster. For people who understand the game, it might be an opportunity window. So why is Elon Musk chiming in? Why would a guy building Mars rockets care about gold or macroeconomics? Because Musk is one of the sharpest capital allocators alive. Nothing he says publicly is random. There's strategic capital positioning behind his words. His three big things to watch are not casual warnings. They're second order, effects that can reprice global assets. Based on his comments and the global setup, here's what those three shocks likely are. The first is the global energy power shift. We're not just talking about oil anymore. The new energy system is electricity, storage, and computing power. Look at Musk's empire. Tesla with solar EVs and massive grid storage. SpaceX and Starlink with global communications and future space. Resource infrastructure. Investments in lithium mining. He's building a planetary energy internet. So what's coming next? A geopolitical battle over lithium, nickel, and other battery metals. Expect an OPEC for battery metals. And on the other side, China dominates the entire green energy supply chain. The US is trying to rebuild it through massive legislation, Collision is inevitable. That raises green inflation, energy transition costs, and global stagflation risk. And stagflation, low growth plus high inflation, is gold's favorite environment. The second shock is the AI singularity and social fracture. AI isn't just a boom, it's a societal tear line. Musk co-founded OpenAI. He's now building XI. He understands both the upside and the threat. AI will explode productivity and vaporize mid-level white-collar jobs and concentrate wealth faster than ever. The unemployment wave won't hit factory floors. It'll hit offices, design firms, accounting, law, creative services. Markets will bifurcate. Tech stocks rocket into the biggest bubble ever. Traditional sectors wither. That imbalance creates fragile markets. The tiniest shock could pop the bubble. When that happens, where does safety flow? Treasuries. Not if sovereign debt looks shaky. Bitcoin. Maybe, but too volatile for institutions. Gold becomes the lighthouse again. Musk warning about AI is also a warning about systemic instability. The third shock is the dollar's coming stress test. This is the silent killer. After the Russia sanctions, freezing reserves and ejecting them from SWIFT, the US signaled. The dollar system is also a geopolitical weapon. Large countries took note. Everyone started asking, where do we store reserves that the US can't seize? And we got a quiet, historic shift. Central banks buying gold for years. China, Russia, India, Turkey, loading up, not for short-term trade, for a post-dollar world hedge. This is the foundation under gold's long-term support. But the stress test hasn't happened yet. What could trigger it? Another US debt ceiling circus. A recession forcing rate cuts while inflation is still high. Political paralysis. When global investors stop whispering dollarization and start acting on it. Gold demand becomes a flood. Musk benefits from global trade. He knows a shaky monetary foundation kills innovation. He smells instability. So what does all of this mean? Energy tears up the old industrial order. AI tears up social structure. Currency tears up confidence. They don't happen one after another. They reinforce each other. The future is higher uncertainty, more volatility, deeper wealth redistribution. And in that world, old investing playbooks fail. This is where baseline thinking and hedging thinking matter. So should you buy gold now or sell it? That depends on who you are, what you own, and what you want. If you own zero gold, this dip is a gift, but don't go all in. Scale in over time. Think of gold not as a jackpot ticket, but as an insurance policy for a chaotic world. If you already hold gold and you're down, ask yourself, why did you buy it? If you chased short-term hype, that's a strategy problem. If it was long-term allocation, then ask, is your exposure so high you can't sleep? If not, zoom out. If yes, use rebounds to trim survival over speed. If you're aggressive, miners offer leverage. Silver offers even more volatility and late cycle upside. But know the risk. And yes, gold has a risk too. If the world magically returns to low inflation, high growth, and smooth globalization, gold fades. But realistically, can we go back? The pre-pandemic world is like childhood summer warm, long nostalgic, but gone. We're sailing in fog now. Old maps don't fully work. So today wasn't about gold prices. It was about using gold as a mirror to understand the age we live in. Investing is just monetizing your worldview. If you see the tide, you set your sails before anyone else. If this helped you peel the onion, hit like, share it with someone who thinks deeply about money, and subscribe with notifications on, because we're not done. The next storm is already forming somewhere on the horizon. I don't amplify market noise. I translate the trend. See you in the next one.